Hey, what is up, dudes and dudettes? This is Due Diligence here. Since a lot of people are still lingering upon this controversial 50% cut loss that I did, I actually don't really have a specific date in mind, so I had to go back and look at the video. So in this video, I'm gonna explain the detailed math that, the reasoning and the detailed math behind a 50% loss. Cut, not really loss, because at this point it's not really 50% loss anymore. A lot of these loss are being retrieved, being recovered, and the reasoning why some trader would make the same decisions as I do and some of you won't, and a lot of logic behind it, a lot of math. So hopefully you guys love it, and this is sort of like a short-term version of the logic, the philosophy, and the math behind it. And there's going to be a way more detailed video about the math on Patreon if you guys are interested. And again, Patreon links is down below. So let's time travel back, right? On August 18th, 2021, we posted a video indicating that, we plan to sell 1/3 of our total portfolio on Mmat in the next week. That a week, right? It's a week is 5 trading days after August 18th, 2021, okay? We didn't say we sold on that day because on that day, the stock was at $2.8. Did we think that the stock might go down to our actual, downside price target of 1.75? Maybe. Some of us, we're already starting to post a bunch of videos on Patreon and having a soft target at like 1.85 or somewhere around like 2.5, and maybe some reverse split sort of projection if it ever happens, right? And then I think this video just made a lot of people super mad for no reason. We never said that we actually sold it on that day, and then now people are just being really salty about, you're like, oh, you guys sold it at the way bottom. It's like, guys, if you go look at the chart, like in what, we're talking about Zim on Patreon. So in what, like August 18th is literally the lowest price chart that they have in an update, right? If you look at the IV, if you guys don't know what IV is, G Inc. IV is implied volatility. The downward implied volatility on that day was just, whoa, it's like stabilizing at one point. And then what else you don't realize is, and all the other YouTubers don't know and don't have access to, is they didn't realize that at that point of the month is option expiration days is almost there. And what else do we know? Oh, we know that, hey, the active short flow is closing to 30% and I have a downward trend, right? If you take the second derivative, if you take the derivative of the short flow and you take the second derivative of the short flow, you will realize that, hey, the acceleration of exacerbating shorting behavior is basically mitigating. So what does it mean is, in the next week from the $2.8, there's gonna be some price action that up to about 20% to 35% to our projection, right? And because back then Felicity is still in progress, and right now we're still building Felicity. Felicity is basically a AI that I plan to build by the end of my completion of my PhD. So right now, I'm at the last home stretch of my master's, and I'm really sad that Stanford didn't take me for their behavioral finance or just their finance program, because I really want to being an expert in behavioral finance, because all of my strategies are actually based on human behavior on the market, and this is why a lot of my predictions are so accurate. So if we just based on all of this information we know, then there's no way in someone's sane mind, even as dumb as me, will sell at $2.8. That's just ridiculous. Like, you guys can just think that we're dumb or I'm dumb. You can do whatever you want. It's the internet. You can go on Reddit and do your keyboard warrior stuff or whatever, right? It's like, we posted a video. We said we didn't sell on that particular day. We later tell you guys that we're gonna sell, and then we basically on that video we told you guys we're gonna sell within a week or in the following week. That's what we said, right? And then because we anticipate a pump. I mean, we didn't anticipate like this thing, but hey, sure, like when at this point we already have reached our price target, we sold at least half of that 1/3. And then on this point, on top of here, we sold another 20%, right? And then on this day, we're like, oh shit, we sold it around this point, right? We still caught up on the price action. And guys, guess what? There's something else you need to know. Because we have 3 personalities. Jimmy is just, back holding it to the end. It doesn't matter. 1/3, if it just gone to the drain, I don't really care. It's just 1/3 of the portfolio. I've already lost like 14K in the stock. Like, what's the, what's more harm to do when Jimmy lost all of his holdings, right? Because what on the at 2.8 right around here, what Bobby is doing is when Bobby look at the option chain, all right, 2.8, $3 strike, basically $60, right? 0.6 per contract, basically $60 for this call option for October, and then 0.4 for September, $1 for the leap option, and then that means that the consolidated average leverage is about 2.5, right? And if you go online and you look at it and be like, hey guys, like if you go online and look at all these analysts, I mean, again, we don't really look at analysts, but we use them as sort of like a dummy projection, a softline dummy projection. So the dummy projection is all of the analysts think that, hey, at some point the stock's gonna reach $6. So when it reaches $6, by the end of, at any point by the end of 2021. Sorry, this is supposed to be 2022. Sorry, I just saw that. You're gonna have at least a 5x return on a contract if it actually reaches $6. Okay, so Bobby is thinking, okay, so DD did 1/3 cut loss at negative 50%. Makes the remaining 2/3 of the holding increase its cost by 50% of the 1/3 divided by 2/3 of the remaining shares. That also means that with regular means, you have to be over 100% up to get that back. So what is the probability of being 100% back on a pump and dump stock like this? And also why we categorize this as a pump and dump stock now is because sorry, like we cannot really put a lot of proprietary information on the public domain, and we obtain way more information than we should have and that we wanted to have because we did so much DD. So then now we have a very realistic understanding of where Meta is at in terms of its own sector, in terms of its own vertical, in terms of like its burn rate and sort of like, because we're based in Silicon Valley, so then we know people. We just basically everybody knows everyone, right? And George used to be here for a couple of years, and we just make some calls and trying to connect some people, and we got some information. And on Patreon we also post some videos about some of the stuff that are on the balance sheet that just seems a little bit iffy, and and those videos sort of like trigger some of our Patreon members to like to fire sell, and I told them not to because don't make emotional decisions, right? This is why like on Patreon we never tell you what to do, because we're not financial advisors, we do not give financial advices, and B, everything we say is for shits and giggles, and C is just whenever you're making any emotional decisions, you shouldn't be, because when you're making emotional decisions, other people can prey on you, right? So then 100% increase on a pump and dump stock is pretty high, right? Look at AMC, but in a short time frame, the probability of setting up a specific time frame of when it's gonna happen, it has to have like 6 or 7 things in place. This is why we perfectly predicted SPRT and BBIG. And today there was gonna be a pump for VIH all the way up to like about 1350. I mean, it did hit our soft target line of 11.84, and we were hoping it to go to 13. I mean, eventually we didn't really touch the stock, right? Because it doesn't really hold up at 11.84. But if it does, then it might actually have a increase all the way up to about $15 to $20. But it's not really a huge increase per se, because for nowadays, when we look at like, even on Patreon, I don't even talk about all of my like oil plays or some gas ETF plays that I make. Like on a daily, I get like 4%. Like who cares, right? Everybody's looking for like a 20% big increase. Like today's AEI, but I'm gonna make another video about it. this AEI play we set up for, basically we're looking for a 3 months play, but the earliest entry for the earliest entry people, when I talk about it on stream, it's been like a month and a half. For the Patreon members, it's about half a month of runway, and made $1 on a dollar stock. It's pretty good. Okay, so if you look at the 100% pump and dump stock, like pretty high possibility, right? But the problem is with MMT is, okay, look at the volume, right? If you look at the volume profile, it's pretty unhealthy. Okay, so what Bobby did is he just set up an 80% target range, and so then he can sell some covered calls in case some FOMO coming in the next month, which it happens. I mean, we're lucky that it happens. And as smart as Bobby, what he does is, if you look at all of these juicy options, as a professional gambler, there's no way that he didn't do anything, right? And you guys just look at that August 18th video, this one, right? This one is on Patreon. I have a more detailed understanding of how everything goes. So you guys, what you have to access to is this one. So you guys look at this one and start hating on us. There's absolutely no reason, because the $3 calls are anchoring calls. We've been making those calls even like all the way back to like here, which is early July. And on stream, and then on the videos, we're talking about we're buying leap calls. And we're telling Discord members that we're buying leap calls. And people are asking us about leap calls. Like, you really think when we liquidate or when we cut loss, we also cut loss all of these leap calls? Guys, really? Like, how long have you been trading? Right? Like, we're not, I mean, you can call us dumbasses or whatever, but we're not that dumb. There's no way we're gonna just liquidate our entire position with that. Plus, DT don't mess with options, only Bobby does. So all of that, and then guess what? By the time when the stock reaches, at this point reaches 6, at this point it almost, like the FOMO, all of the FOMOs are crazy. Like if you look at the $7 calls, like me and all my Patreon members, we basically made so much on just selling CC on that particular day because of premium exhaustion. And then Bobby just liquidated some of the leap year options, and we made some of that. We made some of that cut loss back, and we make it faster than those of you who are just holding it. Why? Because leverage. Options have a intrinsic leverage within them. So we actually didn't really lose money per se on a 50% cut loss. We actually made money on that. We actually make sure that our 50% loss right now is around 20% loss. And you know what? I'm wrong, guys. I'm wrong. You know what? I will say I'm wrong. I'm actually wrong selling those shares, because I could have even made more by selling those CC calls on FOMO day, right? As I explained on a video, and I posted, I think last night. We posted last night, or we posted on Friday or whatever. We talk about it. We're saying like, if we haven't sold with 1/3 at 50% loss, we could have sold CCs on the same day and we've already made a 50% loss all the way back. Because what we can do is we basically just, the market cornered the call buyers on that particular day. I mean, and for those of you who are like, who in their right mind, right? Why would you sell at 50% loss if you know that at one point you're gonna regret about it? A, because I don't want to put my dry powder more in a market because the market is so uncertain. And B, due to MMAT, I lost my day trade privilege. So in order to, and then I set myself a mental, sort of like a mental note for myself. I was like, I am not gonna, add money, pay to win, right? I'm not gonna add more money into this account. And then I'm just gonna, using swing trade and sort of put myself in an impossible situation and see how fast I can recover. And then, my Patreon members, most of them can make day trades, and then they can make those selling CC calls and recovering like 2 or 3 hours with a 50% premium exhaustion. They can make that quick profit, but I can't, because on this account, I don't have day trading privilege. So what I have to utilize by using mathematical equations and doing more and more math is just figure out, okay, so the premium exhaustion is about this much. If I buy put at this point, what is my upside and what's my downside? If I buy calls to hedge my puts, what are upsides and what are my downsides? So this is what I've been doing for the past month. And then it's just, I don't understand, like if you guys don't want my content, or don't want, all of the things that I talk about on my channel, you can just, tune off and just click off the videos and don't look at it. I mean, we provide a lot of, financial educational stuff that most, I just think 99% of all the other your penny stock streamers, they don't really talk about. Did they talk about this? No, they didn't. They didn't even realize that on this day that you have the short volume exhaustion. And then when you have that kind of stuff, it means it will have a pump, right? It just because, okay, we dump some shares at 3.8, dump the share at 4.3 or whatever, that just mean us like we're bad traders. No, we're not. We're actually good traders because we understand when do we cut loss. And then one of the reasons why I cut loss is because A, we have more information on the stock, and B, I just want a peace of mind. Like when I contract this position, I can add on to more, winning positions like, stuff like AEI, stuff like, at that point we have BBIG, right? Stuff like, swing trading other things, and, swing trading a lot of like look at Moderna, right? One of our winning positions, like when we started Patreon, when people come on and we're like, yeah, we did some Moderna calls, and we start buying some Moderna. And guess what? We almost made like, I think around $100 now on Moderna, just like on a per share basis, we almost made $92 to $108 right now. Like, guys, think about it. It's like, okay, so using one of the adages that we learned from, Captain Crunch, unfortunately, he's no longer in a Discord. I think all of the, switching back and forth personality really scared him off. And he sort of, is really confused about whether we're bears or we're bull on the stock. I mean, again, like 2 months, like a month and a half ago, I've already told you guys, like, directional plays are futile. Like for us, like it doesn't really matter if it goes up or down. Like we're just strictly making IV plays right now. Like, okay, are we bear or are we bull? No, being a bear or being bull does have nothing to do with your investing strategy. It only gives you an anchoring position of what the actual value the stock actually mean to you. And then when you know the value, you can make play upon that. This is why, you can be a temporary bull or temporary bear or whatever. But I told you guys, right? In 6 years, the stock's gonna be $30, so it doesn't really matter. I just don't really want to hold 6 years. I just want to get out of here and have other more confident plays that we have more and more information about, that we can probably make a better short-term gain instead of this one, right? And also, we just, there's some information that are a little bit repulsive and sort of like hard to swallow. This is why we don't put it on public domain. And go back to Captain Crunch, right? He used to say that, when you wake up right next to a dirty horse, you have to just take advantage of it because, the probability of you getting an SD is already pretty high. But when I think back when I made that 50% cut loss video, what I'm thinking is, okay, I don't want to put myself in that situation, right? On August 18th, when J Money come out, on the Friday of one of those days, or on the Friday, it actually come out and be like, guys, the economic environment is not really that great, and Delta virus is surging, blah, 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 blah. And if that happens, the stock absolutely will go down to 1.75. And one of the reasons why you have a pump week, or you have the entire pump session here, is because A, you have fake news spreading about the new stimulus check. You have the $3.5 trillion bill. Basically, the budget getting passed. That means the debt ceiling is increasing, and the dollar is losing on the global market. You have all of that situation, and basically, this is one of the last pump and dump cycle you will see on small caps, because They're like, remember some key dates on a macroeconomic sense, right? Powell believed that tapering by the end of the year because he just really liked to do that. What's the probability of that right now? Probably 50-50, because if you look at unemployment rate and look at the inflation, and we also have an algorithm that predicting the peak of COVID and when COVID is almost going to be done. And then by our date, like we mark all our key dates, and it might be a good idea to sort of slowly pull back on the quantitative easing and everything. And what's that going to do to the market? Bang! Right? Short-term speaking, the market is not going to react super well, and it's just going to look at the correction. If you look at NASDAQ, there's like bloody 6 squeezes over the past 2 months already. And then, a lot of bears are on NASDAQ. But, as I told my Patreon members, do not buy puts on SPY, because it's just killing yourself right now. It's like, before COVID happens, nobody believed that buying puts on SPY is a really good idea. But, when I look at the supply chain, I was like, definitely, it's going to go down. That's why I got it. But when you buy puts on Nasdaq, literally you're naked shorting it, because the upside, the potential upside, and how people really invest their reinvestment funds in these index funds are just ridiculous, dude. Like every year you have a soft increase on the Nasdaq. Sorry about this. I'm going on a tangent right now. But anyways, this is basically our logic behind the cutting losses. It doesn't really mean cutting losses. It's just giving me liquidity to let Bobby utilize the options to offset more of my losses faster. It doesn't really mean that, we actually, we did physically sell those shares, but it doesn't matter because we don't want to pick up those shares because those shares doesn't have any leverage. Anyways, this is it for this video. Hope you guys like it. If you have any questions, comment down below. And we're going to be posting a lot of other stickers, tickers, not stickers. So yeah, at this point, you guys are just going to hate on whatever we make anyways. But at least we were honest about what we did. See you guys on the upside.